Welcome back then. Let's turn our attention to earnings that are expected today. Adani Ports is set to report its Q2 numbers. Anisha joins us to tell us what do we expect. Anisha?
Well, overall, we're expecting a steady set from Adani Ports this time around. However, versus the growth rate that we have been seeing for the last few quarters, that might taper down a tad bit. However, having said that, in terms of the numbers, we are looking at a 13% revenue growth. The margins are expected to expand quite a bit to 61% versus 43% last year. And the profit would look optically very strong, up around 67% at 1,050 crores. But do remember last year there was a one-off item that really led to forex loss, and that's why the profits were lower. And even in terms of margins, that was a specifically weak quarter. Apart from that, in terms of the internal, it is expected to be a bit subdued because remember the volume growth would be hardly in single digit is what the street is expecting, and that is because the overall exempt rate has been rather weak in the quarter gone by, and that is something we all know already. In fact, as per the data that we got from the Gujarat Maritime Board, it was very obvious that the ports like Mundra, etc. might show a decline this quarter, and it will be Dhamra and Katupalli that might drive growth this quarter. Apart from that, we'll also watch out for the logistics business revenue because that is expected to grow on account of the acquisition that they had made. The key thing to watch out would be the management commentary because remember, they had earlier guided for 10 to 12% volume growth, which they had said that they will meet the lower end. And the street is expecting that this time around there might be a guidance cut coming as well. So we'll watch out for that.
Thanks, Anisha, for that. Let's move on and talk about Britannia because they'll also be reporting numbers later today. Mangalam joins in with the key expectations. Mangalam, like most of the other FMCG companies, Britannia also trades at pretty high valuations.
Well, for Britannia, there are three key numbers you got to remember: 6, 3 and 17. 6% is the revenue growth that the street is working with, 3,040 crores odd. The other number that you remember is 3, which is 3% growth in the company's EBITDA and 3% domestic volume growth. The EBITDA that the street is working with is just shy of that 470 crore mark. That means a margin compression of 40 basis points, and the net profit of the company grows at 17%. Now, despite a muted revenue growth and EBITDA growth, the net profits grow because of lower tax outgo. The key things to watch out for this time around: the muted domestic volume growth comes in on account of weakness in rural demand, and the EBITDA margins compress, primarily led by higher input costs. The likes of wheat, sugar and milk prices have seen a bit of inflation. Over and above the numbers, the other number I'll be watching out for is the company's assets or advances that they've given to group related companies or inter-party transactions with regards to loans, because that was the key concern as the balance sheet of the previous 2 quarters were also revealed. So any sort of movement on that is something we'll be watching out for. The stock trades at 50 times, so it is a little pricey, but let's see whether it be a good day or whether it will be 50-50.
Thanks, Mangalam, for that. As we slip into a break, here's a look at the top stories that we're tracking on Money Control Pro today. Is the fall in